We detected an unusual trade worth $3.1 million on Arvinas stock, ticker symbol ARVN. And so in this video, we will analyze this unusual option activity that happened on May 2nd to find out if this wealthy investor is bullish in buying or bearish in selling. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better financial decisions. No wonder the rich keep getting richer. And so without further ado, let's dive into our data analysis so that our subscribers can also profit from this deep knowledge too. And so as we can see here on the options time and sales tape, on May 2nd at 1:24 p.m. at the 3-second mark, June 20 options at the 5-strike calls were being traded, 12,703 contracts for a price of $250 each. Now keep in mind that these are option prices, and so we need to multiply by 100 since each option contract represents 100 shares of stock. And so each of these call options cost $250, and since there was a total of 12,703 contracts, we multiply that out and we get a total trade that costs $3.1 million. But keep in mind, this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk trades with a higher probability of profit, then head over to our website. We'll put a link at the top here where you can also learn strategies to increase your profit potential. Now, with that said, we still traded this, but we used position sizing to manage our risk. As you can see here for the June 20 options, at the 5-strike calls, our position over here, POS stands for position, and the green color means a buy position. And notice how we only had one open contract at the open interest, which means that this wealthy investor was clearly opening new trades because it would not be possible to close out of that many contracts if there were only one open contract. And so based on our analysis, this wealthy investor was buying these 5-strike calls for $250 each, as we saw earlier on the options time and sales tape. And so when we analyze this trade, we can see here on the risk profile profit loss graph where the profit loss shows up over here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the profit or loss. Note the zero break-even line here. And so when the share price goes down, you can see that it becomes a negative loss. It is below that zero break-even line. And when the share price goes up, this trade becomes more positive, more profitable, because this is a long bullish trade. And we can confirm this on the options Greeks. We have a positive delta trade. But be aware of the risk on this trade. We have a negative theta decay, which means that as time goes on, this trade loses value due to time decay. And also, if we take a look at the charts, we can see here that the stock recently dropped after earnings, falling to this support level here at the 52-week low. And so while we could potentially rebound from here, there is also a good chance we could also break down lower. And because of this added risk, along with other factors, we only took a small position in this trade. We don't put a lot of capital into these higher risk trades. Instead, we focus most of our capital in the lower risk trades with a higher probability of profit. If you are interested in those, make sure to go to our website. We'll put a link at the top here. Let us know in the comments. Do you think Arvinas stock is a good buy right now? Or do you think it will crash down lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.